So I think we got to look at the action we saw yesterday. Bond yields, they moved sharply higher, about 10 basis points when we're talking about the benchmark 10-year. Then we see the S&P and the NASDAQ have their worst day since October. What is your rate outlook? How do you see your rate outlook impacting the markets going forward?
Yeah, and thank you so much. I think for 2024, we are optimistic on rates. I mean, I know that the Fed is saying 3 for 2024 based on their dot plot, and you're seeing everyone out there saying anywhere from 1 to 5 to 7. I think we are sort of in that sort of 4 level, maybe 5, but not as aggressive as the markets have priced in. I mean, I think you look at the reasons why. For example, services inflation is still above 2%. We've seen falling energy prices, but it's more important to loosen the labor market in order to reduce services. Also, you have the fact that the economy is starting to slow down. The Fed needs to cut rates. Also, one thing we've been telling you and your viewers is that the Loretta Mester factor is important. Loretta Mester now is a voting member of the Fed. She is one of the most hawkish members of the Fed. She's on the Fed as a voting member for the first 6 months. She's going to have a little bit of a hawkish bias towards the Fed. So net, I think we expect maybe 4 rate cuts for this year. Not as aggressive as markets have priced in, but a little bit more than the Fed has suggested. And also one more point, keep in mind, is that the Fed funds rate is about 2%, 2.5% above inflation. It is extremely restrictive already.
All right, you got a couple points we got to keep in mind there, Gene. I guess we'll get some answers at 2 p.m. Eastern when those Fed minutes are released. I want to talk to you about your S&P 500 price target for the year. It's 5,100, about a 6% upside from where we are right now. Give us a sense. How do we get there? Is it the market broadening out and all sectors participating in a rally? Or do you think tech continues to live up to its AI expectations and its high valuations? Also saw you there. You expect the earnings recession to be over. Do you expect the earnings from tech to live up to these high valuations?
Great question. So I think what's going to happen in 2024 is that near term, a lot of the 2024 returns were pulled into 2023. That makes sense. What we do see, though, is that the market breadth will widen as the Fed cut rates. And what we've sort of termed 2024 to be is much more of an opportunistic bull market. Not everything is going to go higher. We are going to see some volatility in the markets. The volatility is going to create a lot of potential opportunities. Areas that we are really excited about, value, for example, small cap. I think if you take all things together, how do we get a price target of 5,100 for the year end? It's about 6 to 8%. Things we're looking at is that interest rates are going to come back to normal. The recession is going to prove to be a non-event. We saw a huge surge in productivity late last year. That's amazing. That usually occurs at the end of a recession. So maybe we don't have a recession. And then your point, what you said earlier, the earnings recession, in our opinion, is likely over. 2024 earnings should rise about 11 to 11.5%, according to FactSet. Good news there. We think the earnings recession is over. And think about this. PPI is falling at a faster clip than CPI. Profit margin positive.